We are living through some extraordinary times right now for people who have steady income to be investing. I believe if you do not take advantage of this right now, you will be missing out for the next decade to come. I got a message from a follower of mine on Instagram, and he said, I would really appreciate a video if you could kind of talk about how the average person, the average worker who has a career which they love and they're getting a decent income from can use to build wealth. So this is that video. I am Georgie, aka Funancialism, and I run this YouTube. I run a financially savvy Instagram page, also by the name of Funancialism. I'm a board certified behavior analyst, and I have been investing in stocks, building generational wealth since 2015. This channel talks all about how I'm doing on my journey and how you can use the knowledge that I've acquired by reading many books, listening to hundreds of hours of podcasts, and I basically condensed it all between my ears. So if you're interested, stay tuned, drop a like if you're ready to strap in and enjoy the show. So right now, we're going through a bear market. A bear market when it comes to stocks means that stocks have dropped 20% from all-time highs. We're kind of right there in that limbo zone. Oh, we're in the bear market and we're not. We're in and we're out. Bear markets are very scary times, especially for new and kind of intermediate investors who've been doing it for a number of years, kind of like me, 2 to 8 years or so. People get spooked. Why? Because it feels like every single time you're putting money into the market, you are actually burning it. But that is not what is happening. If you invest, say, $3,000 into stocks, it's not like the next day you could have minus $3,000. Stocks don't work that way. Now, especially if you're investing in index funds, which I'll talk about in just a moment. So for me, I can log on to my brokerage account and I could see minus $9,000 in a single day. The only reason that is possible is because I have been investing for so long. It's actually all of those small incremental dollars that I've been putting into the market that have been burning up. But it's not that I'm losing money. I still own the same amount of stock market space. It's the same as if your home goes down in price. That does not mean it necessarily goes down in value. It still provides the same exact services. Just people are willing to pay a little bit less for it. That does not mean that you are more inclined to sell it because the price drops. So right now is a great time to be buying up stocks at a discount. Typically, these types of crashes happen once every 10 years or so. Now, if you lived in the last 20 years, you have seen this about 3.5 times. Once right now, then during the pandemic in 2020, then in 2008, and the dot-com crash between 1999 and 2002, where tech stocks have crashed. So what can the average person do? Now, earlier I mentioned the S&P 500. This is one of the most rational investments that a person can make. You are investing in the top 500 companies in the United States of America, and you are betting that the top 500 companies will continue leading the pack, and you are okay with the fact that some will not survive until the end of the decade or the next 30 years or the next 60, but you are also accepting that new companies will come along and replace the old ones. For example, in 2020, I believe Tesla joined the top 500 companies. Now, an S&P 500 investor has access to Tesla without doing anything else. However, I want to say that if you are the average person making a decent income right now, the most important thing for you to do is actually, right before you invest, make sure that you have your safety net, because you can always lose your job, and you need to have maybe 2 to 6 months of cash reserves. Now, I am totally okay with you building your cash reserve as long as you're and investing at the same time. The two are not mutually exclusive, but I would go as fast as you can to build up that first month's cash reserve, just in case something happens, so you have 30 days of protection. Now, after that first month, you can be a little bit more aggressive with investing into stocks. But for the average person, even investing something like $1,000 right now is not that likely to make a huge difference in the span of the next decade to come. Why? Well, think about it like this. The S&P 500, the top 500 companies, grow at an average of 8 to 10% per year on average. So you will have negative years and positive years, but over the long run, you will see 8 to 10% returns. At least this has been true for the last 100 years. That's a lot of data to consider, but I'm assuming that the next 100 years will kind of mirror the last 100 years. I think the odds are in the favor of that happening. Even if something dramatically changes in the world, you can diversify your portfolio even further by having international funds and all of that. But while you're building in your first few years of investing, it is okay to not be diversified or seek safety, right? You're building wealth. You're not protecting wealth. Those are two different investing strategies. So here's what I would do with $1,000 if I were starting from scratch today. The very first thing I would do is take advantage of all of the free promotions that exist from investing platforms, whether it's stocks or crypto. For example, there is a Fidelity, which from time to time gives away $100 for new investors. I always post on my YouTube, on Instagram, when this is happening. Currently, Charles Schwab is doing such a promotion. If you invest $100 with Charles Schwab, which is a great investing platform, you receive $101. This is not paid. I don't get anything from that. Voyager is a crypto platform for trading crypto coins like Bitcoin and Ethereum. If you're interested in that, I am paid to share this information. If you make an account and deposit $100, we both receive $50 in cryptocurrency. That is actually equivalent to 3 to 6 years of investing in the S&P 500. So would I rather have $100 go into a consistent 10% return, or would I take a guaranteed 50% return right now with 3 minutes of work? So think about that and optimization. There are tons of these promotions, and with $1,000 locking them up across different platforms for 30 days or so with just a few minutes of work, I think it is more worthwhile to do that than to invest in stocks without getting those promos. Now, if you're in the $10,000 range and you pass that first $1,000 invested, then I would definitely take a look at index funds, which track the top 500 companies, or sectors that you're interested in. Now, that's a more advanced topic for this video, but the next step that I would do while you're building your wealth is to cut your expenses. Now, I would be saying this even if we were not in a borderline recession. I believe that the average person can save from $200 to $1,000 a month, assuming you have about a $4,000 monthly range of income. Too many people spend money without really assessing their values. Is this spending making me happier? A lot of people, they just willy-nilly and do it. Willy-nilly. I am a boomer in my soul, but I had to use that word. I'm proud of myself for using willy-nilly. If you liked me saying willy-nilly, drop a comment below and challenge yourself by writing in what can you cut down on, and then replace that money, right? So if you could cut down on going out and eating, and cut it from $300 a month all the way down to $120 a month, well, then I challenge you to take that savings and open up that Charles Schwab, get that $101, open up the Fidelity when they have that promo, open up a Voyager, and we both get $50 each. I will drop a comment below, or it will be in the description below, of how we can both get $50 from just a few minutes of work. So with that being said, I believe these are the first steps for someone who is in the workforce, getting paid a decent income, and they are ready to invest. So with that, if you enjoyed this video, drop a like, drop a sub, and I will see you guys in the next one. Peace in.